Okay, welcome to our weekly call, everybody. Today we have the most exciting agenda. It's talking about HELOCs or home equity line of credit. Only mortgage lenders can get excited about HELOCs, maybe, but we really like this product a lot. And while we don't specifically make home equity lines of credit, we are very trying to be knowledgeable on them, and we have partners we work with to deliver good home equity line of credit products that are, we feel like, priced really well, as well as have no closing cost. So, of course, it's Alex and I today, and so we're going to let Alex sort of lead us off with why we like this product so much. Tell us about it, Alex.
So I think one of the things that maybe get in the mortgage business is just impact in general. How can I impact someone's financial life to be significantly better? And I think you can apply that to a first-time home buyer, first generation of a family buying a home is a really big deal. And you can apply that to, investment type of purchases like we typically deal with on the Outer Banks. And so I know that the home equity line of credit, before I even got into mortgage, was a product that I really thought was interesting. And I saw or heard about people really progressing their financial lives because they had access to their money in their home. And typically the home equity line of credits product that we're talking about today, just so people know, is on a primary home or on a home that's not rented, is where the line of credit pulls off of typically for what we're talking about. If we talk about rates, terms, and things of that nature, we're not talking about properties where you're getting equity out of the property when it's already a rental. We're talking about primary and second homes.
Yeah, I will say doing this on a rental property is difficult. We can hit on that real quick near the end about rentals.
Yeah. But why I love the product, and what just kind of like, it's just a reminder every day to me, in my opinion, about the home equity line of credit is that, the one situation where I saw it used the best was I had an investor essentially where they were going through a different economic time. They already had a home equity line of credit in place. So just because that their financial life was changing doesn't mean their access to their line of credit changed. And so when they had the opportunity to buy their investment property, they were just able to pay cash. And it made, during that time of when real estate was going down, just made it so much easier for them to be able to buy an investment property without having to go through the rigmarole of getting financing on a building that was just kind of challenging, that was unique.
Let's make it clear. They still borrowed money. They just had this line of credit in place. The market was correcting in the housing market, and so they were able to just write a check off the line of credit and buy the house.
That's right.
Make payments on the home equity line of credit. So they didn't really pay cash. They paid cash.
That's right.
Accessing the line of credit.
Which is exactly what I think a lot of people do today. When you hear there's basically over 20, I want to say a lower number because I'm trying to be always a little cautious and conservative, but around 20 to 25% of people are cash buyers according to the MLS market. Or MLS data, excuse me. And I think a lot of that reason is that they're pulling cash from a home equity line of credit. They're pulling cash from maybe a brokerage account, and they're combining it and then becoming a cash buyer is why this quote unquote cash buyer in our market exists. But when I saw this one investor do that, I drive by the property every day and I just say, man, they really scored big in a time where it wasn't easy to get a mortgage, but they had the proactive strategy, they had the line of credit in place, and now that property is exponentially worth more. And so it's just, when I see that property every day, it's just a reminder that home equity line of credits change that person's financial life for sure. So that was one of the reasons I kind of gravitated towards that product early on. And then additionally, it's been a big driver for my success as a mortgage loan officer.
So tell us how you use it in your everyday business, because not everybody is really, as I would say, proactive enough to get a home equity line of credit until they need it. Sounded like your customer went out and got a home equity line of credit a long time ago, and then, used it later.
Exactly. So I use it in my business and the way it impacts me because, and a lot of times I'll look at listings and I'll be talking to agents and it'll be $1 million listing and it's typically a second home. And I'm like, that property needs probably a 20% down payment for most people for most financial, loans or products. And I'm like, that's $200,000 plus closing costs, which maybe is 20,000. So it's $220,000 needed closing for their second home. And so it's pretty easy to talk to an agent and say, or just anybody really, just people, not even an agent, just people, and say, that's a lot of money to come up for a second home, $220,000, right? It's pretty easy to say that to anybody you're talking to, and they'll pretty much nod their head and agree. So in my business, when people are buying second homes and investment properties, and they typically don't have the cash sitting necessarily in their checking account that day when they're making an offer, is using the home equity line of credit as their down payment source. And so to your point, Drew, is that especially the agents that I work the most with, they really try to get me the client early on because they know that the cash to close is typically an objection. They know if the lender can remove that objection, then they're one step closer to making an offer on the property. So, happenstance today, right now, I have a client that talked to me about 60 days ago. I talked to him for maybe 10 minutes. I don't remember exactly where I was going, but I was driving. I was either going to Raleigh or Wilmington. I pulled over at a Starbucks. I took the phone call from the prospect, and he basically said he, for lack of better words, didn't have the cash ready today. He didn't really give me much about his career, his credit score, and stuff like that. But in that 10-minute phone call, I pulled over on the road. Obviously, I'm trying to expedite this phone call and trying to keep my, personal life moving forward. And I said, do you have a home equity line of credit? And he said, no. I said, well, that's the answer. You need to go get a home equity line of credit. It'll solve this problem. You can put down your full 20%, get better pricing on everything. And so after that phone call, he said, well, I'm going to call my local lender, my local credit union. And I said, that's fine. If you want a referral, let me know. My referrals are relatively prime minus a half, which is prime is, what's prime today? 7 or 7? It's 7.5.
7.5.
Prime 7.5 today. So I was like, typically, some of my referral partners are around 7%, some are around 6.5. But if you want to use your local lender in your town, and feel free to use them. He calls me back or emails me back within 10 days. Hey, my out of town or my current lender has a rate close to 8%. And I was like, well, you don't have to use them. If you want my referral, you can have it. Took my referral closed home equity line of credit within 25 days. Then literally on the next day of closing the home equity line of credit on their primary home, within 4 or 5 days, they put the new house that they were going to buy under contract. And I just went through the whole process, appraisal, title work, all the stuff. And I just got a clear to close on that property. So because of the proactive strategy of that real estate agent giving me the client early, I was able to impact, of course, my success of closing a transaction, all due to the home equity line of credit. And this is just one example. I mean, I can think of at least 5 to, I can think of 5. I've had 5 people written down right now that I have told them about the home equity line of credit, and they have placed the home equity or gone through the process, have the home equity line of credit in place, and about half of those 5 or 6 people have actually bought a property, like I just explained, that one I'm closing on this week, and the other half actually haven't bought a property. I think that's important to make a point there.
Well, yeah. So I think, what I'd like to say is that, we like to be solution oriented to help realtors and builders figure out ways to get their clients to be able to buy properties if they want to. Part of our job is not just taking applications, but figure out a way to make things work. And so another interesting thing, if you'll let me have the floor for a minute, is is, you can also, instead of doing it on your primary residence that you live in, which is what this scenario was, you can actually get, say you're buying a house for $1 million. Again, we use that number as a simple number, and you don't want to come up with 20%, $200,000. We have lenders we work with that will allow you to get a 10% second on the property you're actually buying as a purchase money second. That means you can have 90% financing on the $1 million property, because maybe you didn't have as much equity back home as we needed to get that much money. And there's no increase in the rate, and there's no MI, there's no mortgage insurance. Now you can do this with sales prices all the way up to, I think, $1.5 million. So instead of coming up with $300,000 on a $1.5 million property, you're going to come up with $150,000, 10%. And you don't have to tie it to your primary residence. What are some other situations where you think you can use a home equity line of credit, especially on the beach? What's the one thing that people do that we don't, you think about? What is it you think that we tell people a lot of times to use that doesn't have that? Just typically your financing for these type of properties is not very great. What would that be, you think?
I'm not sure the answer you're looking for, but I think the place they use them the most is renovations.
Mm-hmm. Well, I was thinking lot financing.
And that's my next. So renovations, and then like Drew said, buying a piece of land. A lot of times people buy land, quote unquote, again, cash. And you'll see this, especially in Corova. I feel like it's a really hot spot for people to pay cash for $50,000 for a $50,000 lot. That's, close to the ocean. It's not oceanfront, but it's very close. This is the cheapest lot by far they can get that's really that close to the ocean, and they're cash buyers. Well, how are they cash buyers on the $50,000? Most of the time they're pulling from a line of credit, most of the time. And I think one of Drew's minute points that I don't want to take up this whole call about is that when you buy the lot with a home equity line of credit, the property, being the lot, doesn't have a mortgage on it. It's obviously free and clear. And when you go get a mortgage on that property that's to build the home, you aren't able to then get a mortgage and pay off the line of credit at a different location like your primary home. That's not allowed. One
of the negatives. That's one of the negatives.
It's a negative of why you would not want to get a home equity line of credit to purchase a lot. Right.
What I would tell people is, if you want to maximize financing on your lot construction loan, you really need to come talk to us, because using a HELOC is not necessarily the greatest idea, because it's hard to get that cash back out of the construction loan to pay off the home equity line of credit. Even if the value's there, the lenders don't want to give it to you. It's a stupid rule, but it's the rule we have to live with. And there's ways that we can guide you in doing that when you come to building. But it's a long conversation.
I still think I'm not done with why I love the product. I just want to get it out.
You only got 5 minutes. You got 5 minutes. It's a 30-minute recording. It cuts you off after 30 minutes.
I'm really not done about how much I love the product. Not only does it, I think about the investor scenario that I see every day that changed their financial life. Not only does it impact my business, but I also love what it does for the consumer, how the structure of the product works, which is what I was going to mention when I said, 5 or 6 people of these have bought a house and used their line of credit to purchase a home, but the other 3 or 4 haven't. They haven't actually pulled the money out. And that's the other great part about a home equity line of credit is the product itself. I kind of think of it like there's a lot of business owners that believe that you shouldn't really have to have a salesperson. The product should just sell itself. And I think the home equity line of credit really does that, because the product being the fact that the payment on a home equity line of credit is a lower payment. The payment is an interest-only payment, and compared to, like $100,000, just as an example, if you did a principal and interest payment, taxes and insurance, the general rule of thumb right now for market rates, et cetera, is $100,000 borrowed is about $1,000 payment, give or take, depending on your taxes and insurance. Well, a home equity line of credit payment with the rates that I'm talking about with an interest-only payment is probably around a $550 to $625 payment. So it's probably about a $400 to $500 lower payment than a regular principal and interest payment. And so the payment, my point there is that, if you're getting rental income from a property that you're buying on the Outer Banks, or if you're going through a renovation and you're balancing your checkbook or your finances to be able to pull out the renovation and get furniture and get landscaping, do all those things, your payment for $100,000 is only basically $600. I mean, to me, for most people going through housing decisions, $600 isn't a life-changing amount of money when it comes to a payment. And additionally, for those people that didn't move forward to purchase the properties on the Outer Banks, they're not making payments right now. They have a zero payment. They're just waiting until the right opportunity, like that other investor,
the line of credit set up. Right.
And they're just waiting for when they do find the right house. And maybe they will use me as a loan officer. Maybe they won't. That's the risk I take for giving that advice. But I'm just a big believer to try to help people and give them great advice, and hopefully that comes back to me. Sometimes it does, sometimes it doesn't. You just never know. But that's one of the reasons I really love it.
We do all this talk about HELOCs and use them a lot. We don't make any compensation on doing HELOCs. It's simply to make the deals work for the customer and doing the best thing for the customer, what's right for them, and helps the transaction get closed. So we only do have about a minute and a half left. These are 30-minute recordings, and our system will cut us off after that. So I hope that everybody has found this informative and helpful. There are things about home equity line of credits, about qualifying, that we wanted to talk about that we're not getting to. And I want to reemphasize that home equity line of credits do not have any closing costs to get. So they're free to close. It's a great product. If you're looking to buy a house, you should get one really sooner rather than later if you don't have an excess amount of cash.
Even if you're going from primary to primary too, it's a great way to avoid having to sell the home to buy your next primary. So don't just think about it as a second home. And, you can use the money freely. They give you a checkbook. They literally give you a checkbook and say you can use the money how you want to.
Right. So don't forget, we'll be here next Monday. We are the #1 mortgage podcast in North Carolina, because guess what? Nobody else does one. But that's okay. We like doing it. We're having fun. I'm enjoying working with my son. I think we're having some good success this year, and we'd love to help you, your clients, and anybody that's out there watching or reading our newsletter.
All right. We'll talk to you next week.
Thanks a lot. Have a great week.